Good morning, this is Phillip Streible, Senior Commodities Broker at R.J.O. Futures. Giving you a weekly metal synopsis here for Wednesday, January 30th. Looking at the metals, they really came into the start of this week with a much weaker foot here. We saw gold prices pushing down. They couldn't get through the 1650 level. They got down to about 1652, and then we had an option expiration come off the board for February options. Now there was a lot of thought process behind it, thinking that there was heavy positions on the 1650 puts. There was also heavy call resistance at 1675 and 1700. All those going worthless with gold prices right around that 1653 area. Then shortly after option expiration, we started to see a little uplift in the gold. Gold prices here this morning having a real strong day, up about $17.80. The main catalyst for that was GDP figures. They came out with a negative growth figure, and remember that the Fed is very concerned with growth and also employment. We saw ADP come out. That's a prequel to the jobs report, which is on Friday. That came out 192,000. So that had to rewind a little bit at about 7:15 this morning Central. Gold prices were under just a tad bit of pressure as a result of that strong ADP report. And then after that at 7:30, GDP comes out with negative growth. We see gold prices take off to the upside, and they really look like they're challenging and threatening to the upside here. An upside target would most likely be 1700, where the next key level of resistance. Now remember, the last time we were up at those levels, we got up to like 1696, 1698, and we couldn't get through. So if we do happen to get through, I would imagine there would be a sizable amount of stop losses up there, and some momentum traders would come in to help propel it to the upside. The big news that comes out later on today is the Fed, the FOMC meeting. They'll probably keep everything exactly the same. The only differential will be how many people are against continuing the quantitative easing plan and how many people are still for it. So that's going to be what the key level is. If it seems like there's any kind of swing to the people that are against it, you may see gold prices come off a bit, thinking that QE would end sooner rather than later. Other metals here still look very good. Your platinum and palladium have been moving aggressively to the upside. They've been rebounding with the stock market, a strengthening economy, also lower global interest rates, problems down in South Africa with some platinum mines. So that's been helping propel prices upwards. Copper, on the other hand, has been stronger. Actually, if you look at the daily chart, it looks like it could be breaking out of this giant triangular formation on a daily chart to the upside. Took out 374 earlier, so it might be a little bit earlier on a breakout to the upside, but it looks like that type of chart pattern is setting itself up for the like. If you have any questions on futures option trading, give me a call, 1-800-438-4805. Remember, futures and option trading does involve risk of loss and may not be suitable to all investors. Good luck and good trading.